we're talking about a Deca-Trillion type opportunity. We see the biggest CapEx cycle opportunity in over 100 years. We call it the MAC, the mother of all CapEx cycles. For long-term investors, you have to be comfortable owning Tesla with zero contribution from China. That's going to take a few years or more to play out. Tesla, we've said, is an overvalued auto company, but an undervalued onshore renewable energy infrastructure company. It is time to unleash the arsenal of democracy to control our energy destiny. And we, at Morgan Stanley at least, we struggle to find a name that's better positioned than Tesla to show us the way to do that.
In this video, Morgan Mixed Bag Stanley share their thoughts on Tesla, electric vehicles and EV adoption rates, supply chain challenges, and somehow, unsurprisingly, in almost the same breath, make a hell of a lot of sense, and then next minute say something that's so absurdly embarrassing I can't help but roast them. The good news, I agree about the Deca-Trillion-Dollar opportunity. The bad news is, at least for Morgan Stanley, that this video will be going nowhere, and some of their current predictions about EV adoption that definitely won't age well will be floating around for me to continue to poke and prod the bear. And to be clear, I have a lot of respect for Adam Jonas and Morgan Stanley, but that doesn't mean they don't occasionally say or think some very, very silly things. I mean, I'm guilty of the same. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First up, a quick look at the stock market. The absolute insanity, the violent seesaws, the panic, fear, uncertainty, reacting, overreacting, groupthink continues. Today, Tesla stock up almost 6%, and it was green almost entirely across the board. Nasdaq 100 up over 3.5%. Coinbase, by the way, which I tweeted about just a couple of days ago, just sort of thinking out loud, you know, the valuation seems a little bit, well, extremely too cheap in my opinion. Of course, never investment advice, and all my money's still going into, well, actually I have no money, but if I did, it would be going into Tesla stock. That being said, I just want to show you guys and girls, since Coinbase bottomed out the other day, and by the way, it's not saying it couldn't go any further, but bottomed out at around $46 per share, now up over 46%. Absolutely ludicrous. I mean, really. Flagship ARK fund up today almost 12%. However, over the last 1 month, down almost 30%. For a little bit of context, Lucid Motors up almost 15% today. Rivian almost 10%. Amazon stock today up almost 6%. Google's parent company Alphabet up almost 3% today. Even Netflix stock joining the party up almost 8% today. And now over to Adam Jonas of Morgan Stanley.
I think it's time for your audience to really ask, what kind of future do we want to make for our children and for our country? And this is the time, and I think that the Tesla narrative, Tesla, we've said, is an overvalued auto company, but an undervalued onshore renewable energy infrastructure company. It is time to unleash the arsenal of democracy to control our energy destiny. And we, at Morgan Stanley at least, we struggle to find a name that's better positioned than Tesla to show us the way to do that.
So far, so good. Pretty hard to argue with this point.
I can follow the argument that Tesla is much more than an auto company. I can follow the argument that the growth has been huge, that nobody can catch up with them because they have all kinds of things in the supply chain and beyond. I don't get it as an international or as a national security play on energy. Explain that.
So you can't have your cars, your electric cars that we're buying in this country, 50 to 75% or more of the battery supply chain, China. The Department of Energy is sleeping at night. Top priority. Where are we going to get the metals and the materials, and can we control our destiny? So
another great point here, EV supply chain is a matter of national security. It's never a good idea for anyone to ever have you buy the balls unless they're currently dining on them. Geopolitics is complicated. If an industry, a multi-trillion-dollar industry is developing, and key resources, materials, products, it doesn't matter what it is, if there's a necessary ingredient to allow that industry to grow and you're not sourcing, producing, refining that locally, you have a problem. Should, say, for example, China have you buy the balls, as they currently do, 75%-ish of the world's EV supply chain currently local to China, and then for some reason China decides to tighten their grip, it's going to hurt, and you don't really have any recourse. recourse. What are you going to do? Cry in pain? It's not going to solve the problem.
To put numbers on it in terms of how it could translate to $1 trillion Tesla or something like or more. Globally, Becky, we have maybe half a terawatt hour of global battery capacity. We need about 30 terawatt hours for stationary storage and for EVs over the next 20 years. We need 60x. Each terawatt hour is $100 billion of CapEx. And then you get a multiple of that of other adjacencies. So we're talking about a Deca-Trillion type opportunity.
So batteries, next decade, a Deca-Trillion-Dollar opportunity. Can anyone let me know in the comments below if you happen to know any companies who've demonstrated an ability to produce batteries for energy storage and is selling them profitably today to customers? I might like to buy some of their stock.
And you don't need to give Tesla a very big percentage of that. I'm even talking about mining. I wouldn't rule out. Do I think Tesla's going to own a mining company? Probably not, Becky, because they don't want the tailings risk. But they are in pole position to work with the mining industry and to kind of get some skin in the game here and get a lot more adjacencies besides just unit times price car.
This is an excellent, although obvious point, and definitely not a secret. Elon Musk and Tesla have been quite clear. Whatever the bottleneck, whatever the limiting factor is for them achieving their mission, they'll address, they'll solve. Doesn't matter what it is, there's no arbitrary limitations. Whether it's getting into the mining business or creating artificial superintelligence, whatever Tesla needs to do to achieve their mission, wherever the limiting factors are, whatever they need to do, it'll happen. Don't be surprised over time if we see Tesla continue to go further down supply chain, to make acquisitions, to invent new technologies, to assist suppliers, to even potentially take stakes in some suppliers occasionally if that will allow them to improve things. Whatever it takes, Tesla's going to do it. See, most companies, when they hit a wall, an arbitrary wall, like, oh, well, that's outside our area of competence, we can't do shit about this, so we're just going to have to sit here and take it. Meanwhile, Tesla's looking into the future and thinking, what walls are we likely to encounter, and how can we go under, over, through, or around? Most companies, they don't even see the wall coming. They hit it and like, oh, well, we don't do that, so we can't do anything about it, so I guess we're fucked. Meanwhile, Tesla's like, oh, well, okay, so we've got to acquire this, do this, build this, invent this, create this, improve this, whatever. Okay, great, let's do it. Whatever we need to do to get around, over, under, or through this wall, we're doing it.
So you like AMC for getting into mining too?
Well, let me put it this way. Top 5 mining companies in the world, market cap, actually the top 6, okay, their market cap is less than Meta, okay? You can't have Meta without metal. For your audience, again, I think this market reset, it's a time to reassess priorities, right? There's certainly market turmoil, but at Morgan Stanley, working with our colleagues across the sectors, we see the biggest CapEx cycle opportunity in over 100 years. We call it the MAC, the mother of CapEx of all CapEx cycles. This battery and energy renewable onshoring CapEx cycle involves upstream, midstream, downstream, and your audience is going to be a part of it. And we need brains too. We need the children watching your program to take their talents and energy and help solve these problems. Okay, because this, I sometimes do props. This is the equation. Inflation is energy innovation. We need it now. Enough horsing around.
Adam, I can understand your argument on this point, but remember, Elon Musk also has a huge exposure to China with Tesla and making sure that things there go very well. How do you square up those two positions, that this is a national security play for the United States based on the metals, but he also, as a company, is very reliant on China and the production they're doing?
It's a very good point. I'm glad you brought it up. Let's just say Elon's national security clearance is probably higher than ours. Does
because
government
of SpaceX?
work? Well, yes. This is the thing that he's most concerned about, the SpaceX side. And that brings him into a realm where he understands these issues. He's not naive to this, oblivious to this. So you're right. As much as 40% of their revenues and easily over half their profit comes from China. Completely unsustainable. I would urge your audience to calm expectations for Tesla China near term because of the lockdowns, but also longer term because when you have a connected auto ecosystem, it's kind of like a telecom utility. You can't have US telecoms operating in China. You're not going to have China telecoms operating here. So I think there's a way for the Tesla China business to be maybe listed in the Shanghai Exchange and be a Chinese entity and possibly a financial umbilicus to Tesla. Maybe not, but you need to be able, for long-term investors, you have to be comfortable owning Tesla with zero zero contribution from China.
Still not completely sold on this, although there is some validity to the point. Maybe over the longer term, the Chinese Communist Party doesn't really like an American company having so many data collecting devices in their own country. However, if we take Jonas's point at face value, over the long term, Tesla investors shouldn't count on any China revenue, any China business at all for Tesla. Well, it's true today, China makes up a large portion of Tesla's revenue and even larger portion of their profits. Customer deliveries have already commenced from the Austin and Berlin factories, so Tesla massively expanding their global footprint, not just within China.
That's going to take a few years or more to play out and to disentangle, but it's the lens through which we're seeing the long-term truly addressable market for this company.
And now, from some comments that in general made a reasonable amount of sense to Morgan Stanley's latest research note. Before we read through, I just have to show you guys and girls something. These have to be among the most nonsensical EPS estimates for Tesla. I'm just kidding, there's way worse, but these won't age well. Across the top here, we're looking at fiscal year ending 21, 22, 23, 24, and we have EPS estimates, the consensus, plus Morgan Stanley's modelware EPS. As we can see here, Morgan Stanley research estimates with an E. Morgan Stanley expecting for 2022, $8.89 of EPS. They're clearly high, not in a good way. $9.66 in 2023, and what the actual f*** are they smoking seriously? $14.34 in 2024. Every time I look at these, I think that I don't understand what they actually mean by this. Maybe they're talking about quarterly EPS, but that doesn't make sense either because I just not going to age well. Really not going to age well. Anyway, enough of the 150 IQ genius EPS estimates there from Morgan Stanley. Time to read their latest research note. Time to revise global EV forecasts down. Morgan Stanley maintaining their $1,300 price target for Tesla stock. The world has changed in many ways this year. The supply chain is under tremendous stress. Inflation is hampering demand. Capital markets are less ebullient. The economy is decelerating. Geopolitical risks are front and center. It is possible to be a long-term EV bull or revising down the adoption curve through mid-decade. Now, absolutely agree with this. It is possible, but here's a problem. Apart from estimates from Tony Seba and the folks over at Rethink X, maybe a few other folks out there as well, but they are the major outliers, exceptions to the rule. Practically every EV adoption curve forecast is dramatically off the mark to the downside. Almost everyone is massively underestimating how quickly this takes place. If this weren't true, there'd be many valid points in this research note. Tesla had a strong 1Q, but have investors factored in the Shanghai lockdowns? The futile fascist lockdowns? Unbelievable to see what's happening at the moment. I really feel for the people of Shanghai. We'd allow room in the forecast for near-term disruption in China and slow ramps in Berlin and Austin. Yeah, cool, whatever. Tell me something new. It's all irrelevant and who gives a fuck? At least, I don't. Then again, I am a long-term investor, not a short-term gambler. Maybe some people do care a little bit more about these short-term things. Rivian and other cash-burning EV startups have been forced to prioritize cost control while growth takes a back seat. Fair. Rivian and Lucid both reiterated their unit forecasts, which we see as more stretched bull case targets. And I may see as bullshit targets. I get it? See? Because they're not... Yeah, let's move on. GM and Ford each talk about investing $50 billion or so in EVs over the next few years. Those are bull market targets. In a downturn... By the way, this is a great question. How can they spend cash they may not have? Round of applause, Adam Jonas, Morgan Stanley. What a great question. I'd love to hear the answer from General Motors and Ford. Where will the battery metal come from? We believe many of the headline-grabbing EV sales targets made by traditional OEMs were made without fully contemplating the availability and price of critical battery materials. I don't believe, I know. JB Strawwell tends to agree, having famously said, well at least famously on this channel, he doesn't think they've, quote, done the math, and he's right. These OEMs have done a lot of talking, and brain-dead retail investors have done a lot of buying their stocks just because they said they plan to make X amount of vehicles in the future, but again, they haven't done the math, neither of these investors. Probably doesn't end well. Material inflation must hit demand at some level. Now, this is a fair point, but we need to talk about this in a little more detail. Let's read on. How does a 5 times move in lithium carbonate prices not impact affordability and ultimately unit volume? Okay, great point. If lithium price is 5x, that's going to make a meaningful impact on the price of producing these batteries. But as I've mentioned a trillion times on this channel, EVs are a brand new technology. There's a huge amount of innovation in terms of reducing costs, improving the manufacturing process, plus economies of scale to benefit from as companies scale up their EV production. So yes, short-term price increases of materials, commodities, that will have an impact on cost, but at the same time, costs are going to be plummeting for other reasons. The net effect of this over the longer term, EVs are going to continue to plunge in price, irrespective of what's happening to materials costs. I mean, Tesla raised their prices 20+% in the last year on most models. They still still have wait times of 6 to 12 months after raising their prices by 20%. Now, spoiler alert, you know how much material costs would need to increase in order for material costs alone to increase the price of vehicles by 20%? You probably don't. Do the math. You might be surprised. As we know, Tesla doesn't have a demand problem. They have a supply problem. There is a point, if the cost of EVs is too high, people won't buy them. You know, like the cost of most of Tesla's competition. That's why no one's buying them. So in fairness, if we exclude Tesla from the conversation, you know, the company that's massively driving their costs down, deleting parts and processes, running circles around the entire automotive industry, embarrassing manufacturers of complicated large-scale objects, scaling faster than any company ever, continuing to drive their costs down. If you exclude Tesla from the conversation, totally valid point. The EV makers who today are making steaming piles of excrement that no one wants to buy anyway at today's prices, if the price of those ends up going up, yeah, big problems for them. While we remain bullish on the long-term adoption of EVs, we are particularly concerned with 2024 to 2030. I'll try to keep a straight face here. In the US, we currently forecast EV penetration to more than triple from 4.2% in 2022 to 13% by 2025. Now, I know to some people this will sound like a very aggressive prediction. The reason I'm laughing is because it's embarrassingly low. And to rise a further 2.5x to 32% by 2030. Dude. Please, ladies and gentlemen, I encourage you, set a reminder, check back on this video in early 2031, set a timestamp to this exact moment so you can revisit exactly what I said. In the United States, in 2030, electric vehicles will make up at least double this number of new vehicles. Worst case. This is giving a huge amount of breathing room to Morgan Stanley's prediction, alright? If it's 40%, if it's 28%, they win. If it's 64%, I win. It truly astonishes me, and I really mean this. It astonishes me that Morgan Stanley are willing to publish research, which in effect is self-immolation. Although a slight time delay, we'll have to wait a while to see how just embarrassing this prediction was. I cannot believe these clowns are publishing research where they believe in 2030 in the United States, EVs make up 32% of the new vehicle market. Now, I know there's going to be some clowns, hey, they're not talking about that. They're talking about total electric vehicles on road versus ICE. They're not. And before you make that comment, use a calculator and understand the size of the vehicle fleet in the United States and what would be required for this to be true. This is not what they're saying. Occasionally people will misunderstand this, okay? Every time anyone from this industry is talking about EV penetration, EV adoption, they're talking about the number of new vehicles that year sold that are electric vehicles. This is the way to measure adoption. The number of EVs on roads versus ICE vehicles is a meaningless metric. People keep cars for certain amounts of time, sometimes longer than others. It's totally irrelevant. So please don't be that guy or girl. I will take a dump on your face because I've explained this quite clearly. Morgan Stanley continued to embarrass themselves, pointing out that these assumptions were made in a pre-inflation, pre-Ukraine world. Globally, the team's current forecast is for EV penetration to hit 18% by 2025, rising further to 43% by 2030. I mean, bruh, double it and you'll be closer than this. It won't be perfect, of course, I can't exactly see into the future, but I guarantee you, if you double these estimates from Morgan Stanley, check back early 2031 to verify, new EV sales in the United States will be closer to double these estimates than to these estimates, an embarrassing margin of error. While we believe many geopolitical and economical and technological forces will drive higher EV penetration over time, we feel there may be material room to push down the curve for the near term to allow for a necessary re-architecture of supply chain and expansion of capacity to bring EVs to the price point required to fulfill the higher penetration scenarios. What a mouthful. I think your girlfriend said that last night. Morgan Stanley research and comments always feel like a lucky dip. You never know exactly what you're going to get. Loads of great, valid points, many insights other analysts on Wall Street have no idea about or at least aren't publicly discussing. Yet at the same time, I literally want to claw my fucking eyeballs out every time I see EV adoption estimates from just about any of the so-called experts. What fucking planet do you need to be on to think that in 2030 in the United States, only 1/3 of new vehicles sold will be electric? In 2030? I mean, seriously, what planet do you need to be on? It's clearly not Earth. In fact, it's not even in this solar system. The good news, at least for intelligent investors, if you have a thesis and it points to this, yet the consensus opinion points to this, that gaping chasm, the gigantic gap, that's called opportunity. No further comment necessary. I'd love to know what you guys and girls think in the comments below. What's your guess? How many electric vehicles will be sold as a percent of all new vehicles sold in the United States and globally in 2030? Finally, don't forget you can join Patreon with the card in the corner or the link at the pinned comment. You'll gain instant access to my up-to-date Tesla stock price targets over the next decade, plus loads of exclusive content, well over 100 videos on just about every topic you can imagine, and plenty of other perks. So, I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. people. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.